So the topic of the day is CleanTech and what is missing on the way to net zero for Europe. So I'm coming with an industry background. I know nothing about the financial or services industry, except that I know that we need money to support and accelerate and scale the clean innovation that we will need to decarbonize our economy. We're going to present you very quickly an overview of a report we prepared with Breakthrough Energy almost 2 years ago now, which came to us and asked us to investigate what are the technological level that is needed by Europe to be on path of the net zero trajectory by 2050 and to reduce by 55% the emission in Europe. They came to us with this question because, as you know, as part of the recovery package that was voted by the European Union in 2020, a huge part of the 750 billion funds was devoted or is dedicated to clean tech innovation and to accelerating the investment in carbon emission reduction technology. So 30% of that is supposed to go to those technologies. And Breakthrough wanted us to investigate to avoid that this investment don't go only in the obvious one being wind, solar, EVs, the very well known. And the reason for that is that I'm sure you've read the IEA report, which says that half of the solution to reach a net zero economy don't exist yet or are not scaled yet. So the question is, how do we make sure that we also invest in those additional technologies? And more recently, in July 2022, the REPowerEU accentuated the need to accelerate decarbonization of the economy. So the question is, where should you invest? What decision maker should support to make sure that we don't put all the money in the same technologies? That won't be enough. So very quickly, we investigated over 200 technology and selected 55, which were spread across 5 key sectors. Buildings, because as you know, buildings are consuming a lot of the energy and are emitting a lot. Energy, which is responsible of around 78% of the global gas emission produced everywhere. Food and land use, industry and transport. And we looked at solutions at 3 levels of maturity. Some of these technologies are ready for deployment. We call them drive to market scale. They are technologically ready. What's missing is deploying them, rolling them out massively across Europe. And there's a couple of hurdles which we'll mention earlier. The other one is innovation acceleration and scale up. So those are technologies that are pre-industrial, so ITRL, but are not yet industrialized. So we need to invest in those solutions to make sure that they reach an industrialization level that can be then scaled up across Europe. And the last bucket of technology are what we call innovation bets. So those technologies are still in early R&D mode, but we will need them in a decade or in the next decade to make sure that we can reach the carbon neutrality. I'll pass that. That's the approach. You'll find in the report. So the report is available online on Capgemini Invent and Breakthrough report. So 55 tech that we have selected and spread that across the level of maturity and the industry. We use a couple of criteria to select those technology. First, their contribution to the net zero trajectory, what has the most impact of this technology, but also, because it's one of the European challenge, the potential to create jobs and to bring additional added value, so monetary impact in Europe. And that's probably a case for discussion with you, Noémie, because those technology, and we heard it today, need to be de-risked, need to have a strong business case so that financial community can invest into it. And the latest one, it's the ability to deliver emission reduction and job in this decade. So starting right now and not waiting 2050. 2050. So that explains a bit what I was showing. As you can see, we need to accelerate the deployment of technology which are already available and technological ready. So that's the orange part. We need to work and make sure that the innovation, acceleration and scale up will be ready by the end of the decade to be massively deployed in the next decade. But we will also need, and that's the light blue one, the innovation bets, because they will be the one which will bring the additional reduction emission that we will need after 2030. So you'll find in the report a lot of data about it. There is also an Excel model associated with it that is open source. What its graph shows, it's what this technology would bring. They would bridge the gap with the remaining emission that we need to cancel by the end of the decade and by 2050. So there is already a lot of technology which will be used and deployed, and that's providing part of the trajectory of Europe. So they are already identified. But what is missing is how do we bridge the gap to reach the minus 55 and minus 100%. Those technologies, we have identified that they have the ability to to create around 13 million jobs in Europe if we deploy them, if we scale them. So that's a massive impact across Europe in job creation. They will also have the ability to create around 800 billion euros of added value across Europe. And to avoid, to help us reduce by almost 900 million tons of CO2 emission. So that's massive, that's significant, and that's why we outlined that. I won't go through the list of the 55, you've had that in the report, but just to give you a quick overview of those technologies. Some technologies are having a massive economic impact by 2030. So I'll give you an example, and deep renovation, as you know, is one of the priorities of the European Union, building renovation. So deep renovation is how do we go beyond changing doors and windows, but seeing how do we deploy technology that enable to go much further and to enable positive emission buildings. That's using much more wood, that's using accelerated construction materials, using 3D models, etc. That's net generation building. So making sure that these buildings will be much more autonomous, will produce energy. Another area which we believe is interesting, it's the agriculture one, agriculture 2.0, leveraging data, but also the alternative to proteins. We know that agriculture is responsible of many of our emissions. So low emission alternative to meat, yes, we're gonna have to switch a bit our diet. And as well in the energy sector, and that's probably something which will be accelerated given the Russia-Ukraine crisis. Biomethane, we know that biomethane is clearly a lever to reduce emission in the energy sector and to reduce the usage of fossil gas. The challenge is how do we drive down the cost of biomethane production. So there's a lot of levers to reduce the cost of biomethane and biomethanization factories. The other way to look at it, it's what have the most impact on CO2 emission reduction. Clearly, heating and cooling networks has a massive impact. So that's something that should be investigated and deployed much more. Heat electrification, we are talking much more about that since this year. Electrifying heat is clearly something which can avoid around 200 megaton of CO2. And EV, we all talk about EV, but we know that one of the hurdles of EV adoption is the ability to charge in private buildings, in private houses. So there's also a lot of levers to accelerate that. There is cross-cutting topics. Hydrogen, it's not a silver bullet, but clearly hydrogen for hard-to-abate sector, and we discussed it with some of you today, but clearly there is a potential for hydrogen, and that can create jobs, that can create economic value, and there's clearly a race toward clean hydrogen. Gigafactories, we mentioned that because it has the ability to both create jobs, and it's a more discussed topic currently because gigafactories is also linked to reindustrialization. So how do we make sure that we can build and produce in Europe the electrolyzers, for instance, but also the future generation of solar panels that we will need, so reduce our external dependency. Electrification, I think, is a topic that was massively discussed today, electrification of usages. Smart grids, we've heard also a lot talking about resilience, and smart grid will be a topic of people who want to be able to self-consume, self-produce, and self-consume their energy, but also share with their neighbors, with industrial clusters. Bioeconomy, we've talked a bit about agriculture. Bioeconomy will be massive to help us switch to low emission protein, but also to find alternatives to materials which are harming the soil, harming the water, the environment. And last, it's a topic, I think, for the next decade, but it will be massively important. It's carbon capture and usage, because we won't get rid of all the gas-fired plants. We won't get rid of all the installations that use gas or that use coal. So we believe that carbon capture and usage should be accelerated. The deployment can help to capture the carbon and use it for other usages. Just a quick for the French audience, we will issue next week a French version of this report, not only translated in French, but focused on the French economy, where we have selected 16 of those 50 out of these 55 levers that applies to the French context and that have the potential for France to support the low carbon national strategy. And yeah, I think so. This slide is 2 years old, but as you can see, I think it's very actual, very accurate. We say that those 55 quests have the ability to improve our energy security. I think more than ever, this is a very present discussion. So what's missing? And maybe that's a good transition to you, Noémie. What's missing? It's the policy framework, and a lot have been discussed, is being discussed currently in the context of the Repower EU. Sometimes it's very simple measure to change the norms to enable those technology. Sometimes it's making sure that the money goes not only in the R&D stage, and that's probably a question for you, how to make sure that the money don't only go in the seed scale, in the early investment stage, but that we find the appropriate financial levers so that it's attractive for investors to support scaling up program, and to support also companies that are ready to scale up.
So yes, I just have 5 minutes to tell you why we are discussing about that with you today. I think first it's important that financial institutions know that this type of work does exist, because today we know that we have a major challenge when it comes to financial institutions. The first one is to accelerate the money flow to the sustainable projects. And the second part, of course, which is an immediate declination of this one, is being capable of identifying this project. So, of course, the European taxonomy can help today to have a view of where we do stand, but it doesn't help to identify innovation and understanding in which type of innovation we should invest, at which level of maturity this innovation is, and should we go or shouldn't we go to invest this. And we know that the regulator is going to ask more and more to go at the project level, the company level is not sufficient. So we know that we will need an ID card to understand whether or not a project coming from each company is relevant regarding a sustainable strategy. So I think first it's good to know that there is a list of technologies that have been identified and that are part of the solution. We are very focused on the problem, so we hear a lot about oil and gas and so on, but this is also a good way to turn your portfolio into more sustainable, let's say, color, because it's good to also have a look at the solutions and not only on the problem. So what type of discussion do we have today with financial institutions? There is no magic key behind this, unfortunately, to say, oh, okay, this company, this technology, it's already explored by this one, very good, and just put your money here. Of course, it would be too simple. And the point is, if we want to accelerate the identification of this technology, you need to have very skilled and very experienced banker or very let's say, strong expert in a lot of multiple areas working in your teams and capable of doing this analysis. So what is interesting now, it's we have interesting discussion to work more as an ecosystem because in our teams we have the experts, the one who for example, did this report, thank you, it was mission project report. And so the idea is how we could link the strength and help financial institutions in this technologies identification. So for example, we had a discussion a few weeks ago with a bank, a big one, saying, okay, I have a lot of senior bankers, but they are not capable of doing this job. How could you help us first upskill them, and second, maybe go deeper in the analysis of the business models of some companies that would be part of the solutions and see if we should put the money here or here. So that's fine, it's the first part of the question, and with this level of analysis, you will be very quickly investing in the orange one, if you have the pointer. But what about the blue one? So the blue one, of course, it's about also being capable of first identifying them, and second, taking the risk and assess the level of risk related to this blue company. And I am not talking about the light one, which could be more bets. So for the light one, I think the answer it's on ecosystem in the financing by itself. I don't remember who mentioned the blended finance, but I think blended finance is a good way to accelerate the very early stage technologies. On the on the other two, so once again, it's about being capable of having a look at them and supporting the risk. And on the one in the middle, to assess the risk, once again, it's really related to the expertise. So what we see on the market now, and it's not a surprise if you are in the room, I guess, it's maybe before you have 1, 2, or 3 guys in your teams capable of talking about, I don't know, one on energy or oil and gas, one on cement, one on... So, and now you will need people more integrated in your decision process, capable of doing this assessment with the team. So meaning that this part can be outsourced or can be completely part of, once again, of your workforce. But this is clearly here that the fight is going to happen between one financial institution and another one. It's not, I mean, I'm not going to say it's not about the data. Data is very important, and I won't say the opposite. But in this particular case, data is not going to solve the issue, and it will really be about the expertise. So once again, I think, first, thank you for being here, and thank you for having a look at the report, because we do believe this report is very important, and once again, could accelerate the solution. 55, it's not 100, it's not 1,000, and 600, and it's not 2,000, and it's not 10,000, it's 55, so it's understandable. And second, so I think in a very close future, we will be happy, of course, to give you more details on that, or you can meet the people who worked on that and see what type of expertise you will need. But I think, yes, the first stage, at least, it's awareness. So thank you for attending the session.